Let's get in a special guest. Shyam Sekhar, Chief Editor and founder of iThought, joins us right now on the show with his thoughts. Shyam, good having you. Thanks so much for joining in. Shyam, what are you doing right now? Hypothetically, if you were sitting on some cash because you thought at 11,500 or 11,800 that the markets were overvalued, at 10,300 odd, with the markets being in a state of a flux, are you selectively deploying? And if you're deploying, are you choosing to deploy in the large caps, or are you comfortable looking at the broader end of the spectrum too right now?
Neeraj, personally, I don't invest in large caps. I invest mostly in micro caps. So that's where I invest, and I invest for a very long period of time. So the stocks which I had invested about 8-9 years back, some of them I have moved out of, and I am trying to find some things which I can invest for the next at least 3 to 5 years time. So that is what I am doing at the moment. So some of these stocks I am trying to initiate a position and slowly buy. That's what, right? There's no urgency to do anything, but daily there is something that you find worth pursuing and buying slowly.
So the thought or the belief of there being no urgency is because you believe that there will be a protracted time-wise correction that we will see, or do you reckon that there is a higher probability? We can only talk about probabilities, I'm sure, Shyam, right now, but do you think there is a higher probability of the markets correcting from where they are right now?
I think there is a definite probability of the markets correcting from here further down, because you're going to have these elections, and you know the events that are lined up. So markets kind of are predisposed towards discounting those events. Even before the events, there could be nervousness. And if there are adverse electoral verdicts, you can see further nervousness. So I think that usual election year nervousness is bound to affect markets in some way or the other. I'm not able to predict how much it will happen, but you can't escape that. So I think that that nervousness will play out. Plus, I think the markets will now slowly move out of what it did in the last 2-3 years and try to move into a newer investment approach. The market leadership will also shift gradually. It's all not going to happen quickly, and it cannot also. So when the shift happens, some stocks will get sold aggressively among the large caps. Some may be bought aggressively. So you're going to see all these things happen. Usual election year drama will be there in the markets, and that generally trends down than up if the trends are not clear or if they are adverse.
What's your sense of the earnings so far in Q2? We've seen stocks that have not managed to beat street expectations, getting beaten down themselves. But in terms of the overall earnings projection, what's the sense? And do you see a slight bit of a downgrade for earnings?
See, I think the street expectations have been stretched simply because the markets were higher, and we had to stretch our expectations to justify the valuations that were prevailing earlier. So the street expectations at higher levels of indices will always be stretched. So the fact that companies are meeting expectations itself is not really bad. And I expect that more companies will meet expectations than beat expectations. Probably towards the end of the result season, which also coincides with the post-Diwali week, we could see a lot of disappointments coming. But that's like any other result season. I think that our expectations were stretched. I don't really blame the companies. Companies are more or less performing to a certain trajectory.
Is there any positive surprise that you're expecting from any particular space this earnings season? And on the downside, any disappointments?
I think that I don't expect a major positive surprise because I think everywhere the analyst expectations are quite stretched, and we have seen, because you're not seen any sell reports coming in the market even at those highs, right? So that means that analysts have been positive, and they've generally given their higher expectations are only reflecting in their assessments. So I don't expect any major positive surprise. But I think mostly it will be in line with expectations, and we possibly could see earnings downgrades happen after this result season ends. So it's going to be a choppy year where people are also revisiting their expectations, revising them a bit downwards, and trying to make their future performance of companies beat expectations. So the only way that will happen is if you also lower your expectations. And that is what I think is going to happen.
Shyam, mid-cap IT stocks are being clobbered and the numbers, frankly, are not quite living up. Is it a case of stretched valuations which will now revert to normal? And would you believe that there is a case for some more downside for the Mindtrees, the Persistence, and the Hexawares of the world?
Neeraj, you noticed that last year, no one was willing to look at IT. Even in the early part of this year, people were not favorably disposed to IT. And then suddenly, when the rupee started moving, there was a kind of oversimplistic trade towards IT. And suddenly we expanded the multiple. What happened was when the IT stocks were selling cheap, we were not willing to buy them. And then when the rest of the market was selling at a higher multiple, we swiftly expanded the IT multiple because everybody wanted safety. Now the earnings are contracting. So I think when earnings contract, you know what happens to multiples. So again, multiples will contract. I think mid-cap IT companies have always been vulnerable. It's only the bigger people who have somewhat been more stable. So you will see this kind of volatility in mid-cap IT, and I don't think we should look at mid-cap IT as one segment. I think one needs to be extremely company-specific. You need to have the right research, and you need to really understand why you own a company. So you cannot do generic investing in that space. And this year it is going to be even more choppy. I don't think a weak rupee is really going to help companies if they have not really migrated their business models to capture future growth or to at least retain their existing business. So I think that they will be facing increased challenges, and the market is going to again slip into fear when it comes to mid-cap. That will reflect in the valuations.
Okay. Shyam, I was wondering if you've looked at sugar very closely and whether you believe these recent changes give people a chance to invest afresh in the space which for long has been neglected. And if so, are there some names that you can share with us? And the rationale, of course.
First, the disclaimer part. The disclaimer is that I have been invested in sugar for the last 3 years. I have sold some of those companies last year, and I continue to remain invested in some of those companies, and some are publicly disclosed also. During the last couple of months, I have bought some sugar stocks when they were trading very, very low in the expectation of the ethanol policy, and thereafter also. So that's first the disclaimer part. My fundamental investment premise in sugar is that sugar will gradually become more acyclical, and the sugar industry in India will probably become like the sugar industry in Brazil, which means that our valuations are not really reflecting the intrinsic worth of the business. We are still extremely fearful of government policy, despite the government clearly signaling over the last 1 year that the policy interventions will be favoring all stakeholders, which includes the shareholders of companies as well. But somehow, that has not satisfied the investment community, except a few investors. Generally, institutional investors have shied away from sugar. But I expect that over a period of time, that thinking to change, and the government's intent to remove the cyclicality in the industry and restore a semblance of order and balance over the long term will gradually be understood. And that is my basic expectation of sugar. You know the fundamentals. I think that the ISMA has never been right in its assessment of production. And last year they went horribly wrong. And I expect them to live up to their reputation of going horribly wrong. So this year also, I think ISMA's estimates will be way off the actual number. To give you a number, ISMA has given 35 million tons of production, and I expect them to be horribly wrong on the other side, and I expect production to be far lower than that 35 million. As investors, it's very difficult to track a sector where the industry body is constantly not guiding you well, and I understand that, but as an investor, we have to live with that. So you are going to see a lot of volatility in the perception, but not really in the industry, because if you look at two parts of the business, which is power and alcohol, the revenue stream is more or less set. So if a company has got enough scale, you can fairly predict how much they will earn. It is only in the third part, sugar, where there is a lot of uncertainty. But that lot of uncertainty, which is also, in my perception, exaggerated. For the simple reason, the company makes 31, 32 rupees on realization, which some of the UP mills are comfortably making. It means they're not losing much on sugar. The question is whether they will make money on sugar. Even if you treat the sugar profit as optionality, then the stocks were still selling very cheap a few weeks ago. And even at the current level, some of these leading companies are not quite expensive in my perception.